Peter, we're back.
Good morning, my friend. How are you?
Pretty good. Tuesday morning.
Pretty good.
You're so hot out of the gates here, and I'm so cold. Is that like a
Is
Rolling
that why
Stones
you're
song?
wearing the industrial denim?
So cold. It's cold out. Let's take a look at markets here. What time is it even? All right, we got a couple minutes to talk about what's a moving. I mean, whenever I pull up the watch list here, Pete, I look towards the rightmost column, and this is of any platform for any asset class, any market, and look for the biggest move or just get like a gauge of what's moving. And you can see not a ton of movement here, or outsized movement coming off of last night's Asian European session. But what I will say, one of the biggest moves is the continuation of this Aussie to the downside. And we'll start with a daily chart here. Because, man, remember when the dollar's strength started?
Right.
It was, I think, the start of last week, mid part of last week, and this Aussie hung on to 69. We were joking about how it's like, oh, euro went from 112 down below 111, and Aussie went from 69 and a quarter to 68.50 in those first couple of days, and now this market that was holding in the strongest. It's funny how first they took down the euro. Then they took down the pound, and now they're taking down the Aussie piece here as no currency is safe against this U.S. dollar buying.
Right. And while we talk about Aussie, now the Chinese were back in for the first time in a week last night. They had the Golden Week holiday where a lot of people were out. China announced another set of economic reforms. I think Chinese markets opened up after the holiday up 11%. They closed close to unchanged. Very, very kind of typical stuff. So they caught up, and then they gave it back. So we're going to see Chinese equities in the U.S. session, things like XI, things we look at, JD, the dual listed stuff, probably trading appreciably lower. The minute they came back in and that rally didn't hold, you saw Aussie come in and get sold last night. Now, that's about 8 o'clock at night, our time in Chicago, between 7 and 8. We saw the selling pressure really kind of accelerate to the downside a little bit there. So we saw the confirmation, a little bit of the play of that interaction against the Australian dollar as a proxy for Chinese markets a little bit. Mm-hmm. So we've got Kiwi dollar sold a little bit. Not quite as much. We've got a Reserve Bank of New Zealand meeting tonight where they're going to cut rates. They're expected to cut rates from 5.25 down. So it'll be interesting to see if there's a little bit of Kiwi movement later on tonight. But the Aussie, again, being a little bit reflective of that drag on Chinese equities playing through here. So Aussie beat up a little bit harder than some of the other currencies we've looked at. So in a relatively flat night, not every night gives you a ton of opportunity, but in a relatively flat night, there seems to always be something that is moving. And again, guys, if you want to take a little bit deeper dive, tastyfx.com is where you go and you can start to learn a little bit more about products and how to trade them, and also tons of great information in terms of evergreen content as well as actual intel that you guys are putting together every day.
Yeah, it's interesting stuff. But yeah, just last night, to your point, Pete, as Asian markets are heating up, you can see this bid that's just immediately sold into, and then as Europe enters here, they just take this market down to its lows. And now bouncing a little bit off of 67 and change will definitely be interesting here because, I mean, we're 40 pips away from 67, which is absolutely doable in a day, especially you see multiple days where we're getting, 30, 40, 50 pip moves to the downside. And we had plenty of days to the upside of a similar volatility, but it'll be really interesting to see here because if this market can challenge 67 cents again, it feels like, okay, this US dollar weakness isn't a legit story here. We're trading the range once again because you add more data in here, Pete, and look at how many times we've gotten up to these levels over the years.
And haven't been able to really appreciably hold above 70 cents. We're efficient market practitioners. The market will go to where it tends to inflict the most pain. We're at an inflection point now where, as you said, it'll be interesting to see if the market holds the upper end of this kind of tradable range that we've been in over the last year, or it completely capitulates.
Yeah.
Who's got the weaker hand right now? Stale longs.
Yeah.
A little bit. So people who sold dollars, whether that be long Aussie or long cable at 133, 134, long euros above 111 and a half, 112, looking for that, this is, sometimes momentum doesn't hold. Sometimes it continues to go. But this is the case where the weaker hand is stale long. So we'll see how much pain the market, as we call it, the ambiguous them, can put into the market.
Well, it's funny when you talk about, how much pain, or you talk about this often. I probably learned this from you. When people are when it seems like the greatest amount of people are on the wrong side of a trade,
right,
it can be problematic. And it's funny, when we were up here, Pete, and this was, of course, the peak of, we've just cut 50 basis points, which was a surprise,
right,
absolutely not priced in. It was close to 50-50 going into that 50 basis point cut, between 25, 50 basis point. So we get the 50 bip cut. And then afterwards, everybody is lining up on the short dollar side of things,
right,
to the point where, and I'll say this because not even you, me, Tom, Tony, anybody who subscribes to that theory is safe from the fact that, like, at that time, it felt like, holy smokes, my dollars are not going to be worth that much. Like,
right,
I was joking around with Ryan and some of the people of, like, man, like, can I take part of my salary in Bitcoin or like something else, because they're going to hammer rates here,
right,
and my dollars aren't as hard of an asset as they were at 5+% interest rates. And that just goes to show you that, like, that fear builds and builds and builds, and it can exacerbate a move like this. And maybe this market should have gotten to, 68, 67 half, whatever. But it sent this market higher, this pound market as well, up beyond. It got to 130, 131, where we've been. And then that fear really set in on that short dollar side of
right,
things. And they're just absolutely taking it down now.
Right. But the charts are valuable in terms of context. We're not technicians. We don't draw a lot of lines. But again, use what works for you. If you've got if there's a charting pattern or a study of moving average that you look at, it's all doable here. It's very easy to set up. Platform's built for that. I only caution that don't let technical analysis obfuscate your responsibility for making decisions and managing your position. Use them as tools for context, but so often people are like, well, the line says, when I always get in, hey, I'm stuck on this and the line said, I'll get the email. It's like, the line's not telling you anything. You're just turning your decision-making over to the line, which is not what a trader does. So don't do that. Hold on to the decision-making. It's the one thing we can control. Different structure, though. I'm glad you went to cable here because, again, cable, a term for sterling, slang term. One of the first currencies traded in the U.S. was the U.S. against the British pound, and they actually ran an underground cable across the ocean. Yes, for traders to communicate with, and that's why they would call it cable.
That's so wild.
Yeah. So again, this is kind of institutional stuff, but
how does that even happen?
Sterling cable, because you would transact over the cable.
Was the cable, did it float?
No, it was laid on the seabed.
That's unbelievable, truly unbelievable.
Yeah, so that's why, especially outside the U.S., you'll hear sterling referred to as cable trading. So there's a little bit of trader slang for you. But this is, when you look at this, sure, we've given back some ground, both on a percentage basis, just doing the math in my head, and just eyeballing it on the chart. Aussie's given a lot more back than sterling has. Yeah. So relatively, there is both of them dollar strength, meaning currency weakness. Remember, if you're trading these dollar pairs, whatever the currency is doing, the dollar is the anchor piece of that pairs trade. It's doing the opposite. So if we see strong sterling or strong cable, that means we're seeing a weaker dollar.
Yeah, I'm just trying to pull up a little bit of the more historical charts here, because this helps you see a little bit better that even with this 300 pip down move for sterling the last week or so, this market is still looking like it's on its way back to the middle of the range.
Right.
Whereas this Aussie, similar to Chinese equities, even with the bid,
this is bouncing against the bottom.
The last couple of weeks, it's like, oh, we're still only 300, 400 pips from the lowest prices since the financial crisis, and even before that, really. I mean, we got down and traded, 62, 63, which are pretty much those financial crisis lows for Aussie, not unlike, any Chinese equity market that just recently is bouncing off of lows from the financial crisis. And so, yeah, it feels like this Aussie wants to be stronger here than the other currencies. But like we talked about yesterday, it just has a little bit more volatility to it than that pound or euro or what have you. Also want to take a look at dollar CAD here, because US dollar's really getting a lot of strength in here against Canadian dollar, back above 136. And I mean, this is kind of a straight shot here. Right. If I was, looking at the US dollar and all of its strength from the last couple of weeks, I mean, it seems like the US dollar is closest to its highs in this market versus any of the other ones that we look at. And I guess you can say, okay, we're at 136.5, and the highs in here are 138 to 139. So we're about, 200 to 300 pips away from those US dollar highs. Whereas, like, if I come back to the daily chart for the pound,
there's a lot of room.
We're still 600, 700 pips away from the dollar highs against the pound. I mean, obviously, these two markets, keep in mind, with sterling here, sterling comes first, and with Canadian dollar, US dollar comes first. So it looks like a little bit of an inverse. But anything on the US dollar strength against this Canadian dollar, what are the dynamics here? Is it similar to that Aussie, where it's just the risk on currencies are getting hit pretty good here?
I think it's a little bit that. I think what's a little bit surprising is Canada tends to have a correlation to oil. That hasn't worked. We've seen the biggest move in oil last week in 2 years to the upside. Now, we have on staff a crude whisperer, like a savant of the oil industry.
Something like that.
Something like that. Our boy Glenn. But crude actually printed up, I think, far north of 77 last night before it came off and traded a little bit lower. So crude had this almost $10 bounce from low to high. Now, granted, that was off from the 80s, where we spent a lot of the first part of the year. Traditionally, Canada gets a little bit of bounce. So in this pair, if Canada gets a bounce, it means dollar Canada softens up a little bit.
Yeah.
We didn't see that at all. So what we saw is there is no one thing that drives them. It's not just rates. It's just not their relationship to the energy sector. This oftentimes to Canada with bigger dollar moves, not just particular currency. Oh, it was a yen move. It was an Aussie move. But when the dollar tends to be a driver, Canada tends to kind of mimic that move. And we've seen that here, where the Canada has continued to have unrelenting dollar strength, U.S. dollar strength against the Canadian dollar. And it's kind of acted as that pair instead of letting any of these other influences to tend to knock it about a little bit. Play through a little bit.
It's an interesting piece. Yen continuing to fight back a little bit this week, which I thought was interesting, because if I'm not wrong, and I very well could be wrong, I'm wrong very often, the Swiss franc piece is not super correlated with that yen right now, which I would have expected a little bit more, because the dollar did not gain as much against Swiss franc as it did against yen in that dollar buying period of the last couple of weeks. And now, as there's maybe some dollar profit taking, or whatever you want to call it, this week, maybe a little bit more risk off.
8.5 handle move to the upside.
Yeah.
That's a pretty big move.
Yeah.
In currencies that tend to move between 3% and 5% a year, you get a 8-handle move like that is almost 4.5-5% currency move in a matter of a month. That's a lot. So we've given back a little bit of ground. Swiss is, again, yen and Swiss traditional flight to quality. You see dollar yen being sold, or yen strength in times of stress, Swiss strength in times of stress. We're seeing that kind of risk on, risk off, geopolitical wise, play through Swiss, not so much yen. The interest rate piece playing through a little bit. I'm keeping my eye on Swiss. That'll be interesting if we do see more ratcheting up of risk tone. I imagine we continue to see a little bit of
So if you were looking to, let's say, get long vol, you would be selling dollar against Swiss versus against yen right now, which are all three tend to be highly correlated: yen, Swiss franc, and volatility. And also vice versa. If you were trying to get short vol, then buying dollar against Swiss franc might be a more correlated short vol trade versus buying dollar against yen, because the yen piece has got a lot of dynamics that's been so weird the last couple
right.
of
We know
years.
that there's not any single driver for them, but you're absolutely right. I would look that there's been more of a correlation of vol and the Swiss. If I want to play that long, if I think vol's bouncing, I'm selling dollar Swiss. If I think vol's coming in and things aren't so bad, I am buying dollar Swiss.
Awesome. Well, that'll do it for today's episode. You got Tom, Tony, and Vanetta coming up in just a few minutes. Hope everybody has a great trading day. And yeah, always fun, Pete.
You bet. Good luck and good trading, guys.
Peace.